and gentlemen, this is Brian Van Driel, Premier Life and Annuities, National Marketing Director. And with me, I have Jason Raastad, Marketer.
Hello, everyone. Thanks for taking a little time of your day to come join us.
Yeah, I want to thank you first and foremost for taking your time to be with us today. We've titled this webinar, Capturing Higher Life Premiums. And the idea behind this webinar really stems from when you look at other FMOs out there, a lot of times you're seeing them go straight product-driven webinars. This is our product and why you should be selling this product over your product. And we wanted to do something different, give something of value that could that you could walk away from this webinar and use as early as this afternoon in the field.
That's exactly it. And although those technical skills are very important, knowing where these opportunities are is what keeps the guy separate from the $40,000 to $60,000 a year range to getting up past that $250,000 of earnings of the top producers.
You know, and one thing about these 5 ideas that we're going to present today is they're not from Premier. They're actually ideas that our top selling producers in 2013 are using on a daily basis. A lot of these are concepts that have been sold as just as of yesterday. So, you know, these are sales ideas that are relevant, being used on a daily basis. We're quoting and doing case design based off these sales ideas on a daily basis.
That's exactly it.
All right, well, let's get into the first sales idea. The first sales idea is new versus old, and this is a great concept for a client that will say, you know, I've got life insurance, I'm all taken care of. It's a great way to further the conversation with this type of comeback or response to that is, do you have the new kind or do you have the old kind? And what that really does for the client is it's going to get their mind turning, and nobody wants to have old anything, right, Jason?
That's exactly it.
So they're going to want to know, well, what is the new kind? Tell me about the new kind. And what you're really getting with the new kind is you're selling beyond the death benefit. You're getting terminal, chronic, critical, and even income riders that can create a lifetime income that you can't outlive. And it's really a new way of thinking. It comes on a couple different product types. You can use it on term products, or you can even use it on a universal life chassis.
That's a great point, Brian. And when you think about it this way, in the industry today, there's over 900 carriers all offering life insurance with that same death benefit and premium story, touting strength and stability, which all of them are. But knowing where the differences is and seeing the things that can make you unique will keep you out in front of your competitors and keep that conversation fresh with your clients.
You know, and one thing I just thought of, Jason, is generally the riders, these living benefits, are usually free.
They are.
So that's even an added benefit at no cost. You know, one of the things I even think about when you look at the term products is generally when you're working with those younger clients, the question that you can ask them to talk about these living benefits riders is, what's more likely to happen in the next 20 to 30 years? Are you more likely to pass away, or are you going to become an event where you become terminal or chronic or critically ill?
That's a great point. Another way to look at this is when you go in that home, a lot of times you don't know what that hot button is going to be. So the death benefit could be important to them, but having something to protect their family's income could be even more important. And if you can give them all that benefit with one premium, you're going to hit a home run.
Excellent. Let's take a look at a sample illustration, Jason, and how this illustrates in front of a client.
That's great. So what you're looking at here, just to kind of set this up, we ran just a quick proposal to show you how this works. Example, female, age 40, just standard average health, based off of a $250,000 death benefit on a UL chassis. Now, what's so powerful about this story is it's exactly that. It's a story you can tell your clients that's more than just, if you pay me this premium, we're going to pay your family this check when you die. So when you first look at these bubbles across the screen, we have the same thing everybody else can talk about as far as a cash value accumulation, a tax-free death benefit with a level premium. However, something we have that a lot of people maybe aren't talking about is that purple bubble, that accelerated living benefits. What we're going to do is we're going to go to the next screen and break this down to really give you an idea of how this works. So the first accelerated benefit you're going to see is terminal illness, which really isn't all that common, but it's something, or uncommon, excuse me, but it's something that's very important to talk about. In this situation, should your client be have the doctor tells them that they have 2 or less years to live, like 24 months or less to live, they'd be able to accelerate over $215,000 off of that $250,000 death benefit. And they can use that cash for whatever reason, whether it be fulfilling that bucket list, seeing things maybe they've never seen before, or experimental treatment that may not be offered here in the States. They can go somewhere else and maybe have a cure for that disease. Moving right down the list, chronic illness. This has definitely been a hot button in our industry today, and we're going to speak more on this on depth. Where the story sits here, though, is you can show your clients even in younger years where maybe that chronic illness wouldn't come from old age and needing to go into a nursing home, but maybe a disabling accident or something that would take away the loss of those activities of daily living and still make it to where they would need funds to have their care taken care of. Moving to the next portion you're going to see. Now, this is very unique to the industry. There's only a few handful of carriers that are doing this, but basically picture 7 dread disease policies for cancer, heart attack, stroke, the things that can leave you financially devastated, but maybe not completely take you to where you need to be in a nursing home or where you're going to die from it. This is where you can show your clients how they can, depending on the severity, get a lump sum of cash into their financial situation to help pay for those loss of incomes.
That's kind of like an Aflac policy, isn't it?
That's exactly it. So some of you that are familiar with that, that's what made Aflac so popular, is that fear of having these things happen. You can have that built right into your client's portfolio with no extra cost to them.
And we're talking about $232 a month, and we can leverage that into almost $250,000 in living benefits and $250,000 in death benefits. That's pretty powerful.
That is very powerful.
All right, well, why don't we take a look at the next sales idea. The next sales idea is Life Rescue. Life Rescue is another great opportunity to talk to clients after they've given you the response that, hey, I'm taken care of, I've got life insurance. What you can come back with is, that is great, Mr. or Mrs. Client. A lot of the life insurance sold in the last 20 years was interest sensitive. And we both know where interest rates have gone here recently. When's the last time you had your policy reviewed? It may be in jeopardy. And that last comment right there, it may be in jeopardy, is a call to action. You're going to get a client wanting to know, is mine in jeopardy? Can you take a look at mine? Because the last thing they want to do is have to worry about that policy lapsing. So, and as we both know, Jason, a lot of clients, they don't understand how those statements work or what they say majority of the time.
Well, yeah, remember when you first got back and when you first got into the business, I mean, it really does take a trained eye to understand what these ledgers mean. So a lot of times we've heard stories where clients maybe have opened these their annual statements and threw them in a shoebox simply because they had no idea what they were looking at.
So we're looking at clients with underperforming ULs, and where we're going to 1035 that cash value, guarantee the death benefit, and give them new and better benefits, i.e. the new insurance versus the old insurance. And like I said previously, it's a great way to review a client's current plan. So let's take a look at an example here. And this is an actual case from our top producer here in 2013 with Premier, and he just sold this 2 weeks ago. We've got a 64-year-old female that had a $50,000 universal life policy. She was currently paying $218.50 a quarter. The agent opened up this case and saw the statement letting the client know that you're going to have to pay an additional $100 a quarter, otherwise your policy is going to lapse in 5 years. The statement also stated that the client had $9,770. So what this client or what this agent saw was opportunity, as you can see what I put there on the bottom of the slide. So let's take a look at 3 different types of examples and where you can take the client to in this situation. First option is 1035ing the cash value into a new policy and giving them the same exact death benefit, that $50,000. If you look in the upper left-hand corner there, it's kind of small print, but the quarterly premium guaranteed for the exact same death benefit is $143.29. So we were able to lower their premium on a quarterly basis by almost, what, 85 bucks? I can't do the math that fast, but well, it's a significant dollar amount. But almost 85 bucks, and we were able to guarantee their death benefit. And this example, I cut it off the bottom, but this goes all the way out to 120. And we're able to increase their lifestyle, free up some additional income there for them in this option. So that's option number one. It's one of the most popular options to choose. Option two is, maybe we want to try to leverage that $218 they're currently paying. So we're going to do 1035ing the cash value over to a new policy, but we're going to try to buy more death benefit than they currently have. So in this situation, we 1035 that cash value. We're able to buy $62,733 in death benefit for the same quarterly premium. And we were able to guarantee that death benefit out to $120. So we increased the face, kept the premiums the same, and guaranteed that out, gave her the peace of mind she was looking for. So that's option number two. And the last option you can look at, maybe her situation's changed. Maybe she doesn't need as much death benefit. Maybe she's telling you, I don't need that $50,000. Maybe I just need something similar to a burial plan. Well, we can 1035 that cash value into a new policy, create no more payments, and give a guaranteed death benefit in this example of $25,749 or $47. So there's some tremendous opportunities depending on which option you want to choose. What do you think, Jason? You have any comments?
Well, the key here, folks, is flexibility. I mean, and one thing I really want to point out to you producers out there that are writing Medicare products and working in that industry, look at the age of this client. She's turning 64. So as you already know, her goals are going to be changing. A lot of things in her life and a lot of the things she's had up till now are going to be changing here very soon. So a couple things to remember is as those goals change, she may need more money in her life to pay for some additional medical expenses that are coming up. She may have had maybe coverage through her group where she wasn't paying anything, and now due to her lifestyle and maybe she wants to travel, she may have to pay some more extra additional premium to pick up a Medicare supplement. Or she may be in that position where she wants to give the absolute most leverage and most dollars to her kids. This is going to give it to where no matter what her goals are, you can keep up with what she needs to do.
Well, those are some excellent points, Jason. Let's take a look at the next idea. This next idea is called investing into the family. And before I get into the slides, one thing that we as agents sometimes overlook is we've got senior clients, and we're always trying to talk to them about insuring them and making sure that they're covered. But one thing that we often overlook is the children, and using the parents as an investment in this case, in this example or sales concept, to create additional sales that the parents or your clients would not have to pay for. So when you think about an investment, the perfect investment, it's got to fit a couple of things in our opinion here, and that's use the least amount of money to create the greatest amount of wealth, life insurance, guarantee the wealth will occur and the legacy will transfer on a tax-free basis, life insurance, and create multiples of wealth immediately, leverage and controlled assets, life insurance. When you start to think about what's the traditional way of thinking when you think about investments, you think about the stock market, you think about the real estate, investing in real estate, you think about qualified plans, IRAs, 401ks, or bank savings vehicles, CDs, savings accounts. The problem with these vehicles is they do not meet all the goals we previously mentioned. They may meet one or two, but not all of them. So let's take a look at an example of this investing in the family concept. So this is a case that was sold, about a week ago, Jason?
Roughly, yeah.
About a week ago. We had a father that was 60 years old with 4 children. Their ages were 37, 36, 33, and 31. They bought a life insurance policy on the father for $500,000 in face amount. Each child's going to pay 1/4 of that premium, that monthly premium. So it's $206.31 per child per month. And each child, in the event of death of their father, which we know will happen, each child's going to receive $125,000 tax-free, guaranteed, no matter what. So I played out a little scenario based on each child's pay-in amount. If you look at that over a 5-year period, they paid in just over $12,000, and they're going to get almost a 10 times return on their money. If you look at a 10-year period, they're going to put in just under $25,000. That's going to be a 5 times return on their money. If you play that over 20 years, they put just under $50,000 and almost 2.5 times return on your money. That's a pretty powerful story, and it's guaranteed.
That's amazing. The beauty of this is conceptual sales at its greatest. Now, when you do the math here, you look at this is over $800 per month of premium you're bringing into your business that you wouldn't have got anywhere else. You're not replacing anything. This is pure new business. And also remember, by using a concept like this, now you're building a relationship with all 4 of these kids and their families. So now you're building that, you're stretching out your base of where you're doing your business.
And you know, when you talk about this, each child's monthly premium, the one thing that came to mind is, you know, maybe those children are going to say, well, where do I find that? Well, you look at what your traditional way of thinking you're investing, where are you putting that money, and does it make sense to invest in that 401k that's tied to the market, that there's no guarantee, no matter what, and you're being charged a fee, you know, real estate, up and down, no guarantee. So this is a no-brainer as far as I'm concerned. You're going to guarantee them this dollar amount no matter what. And it's on a tax-free basis. So you think about the traditional way of thinking, what type of rate of return are you going to need on a taxable basis to receive a after-tax earning of that 125?
There's really no other place that you're going to get that.
Perfect. So let's go into the next idea, and that is LTC alternatives, and I'll let Jason take this one.
This has by far been one of the hottest buttons in the industry today, and a lot of you that have been in the long-term care industry will understand why, is that landscape's changing. Now, before we get too deep into this, we want to make sure it's understood. We're not saying we're going to replace that long-term care sale, but it is a great alternative. Some of the reasons you see on the screen, just going straight right into it, the first one and the foremost is it handles the most common objection to long-term care, the lose it or use it mentality. For some of those clients out there that say I'd rather self-insure than pay premiums for the rest of my life and possibly never use it, this gives them the chance to either A, we're gonna either protect the wealth that your family has, or B, we're going to drive wealth forward and pay a tax-free death benefit to your loved ones. Rolling right into that next, one of the biggest reasons why is it gives you, your client, an either-or approach. So if you're going to offer a traditional long-term care sale, this may be a great option to have side-by-side with it. That way you can give them 2 options and offer, basically some have benefits and downsides to both.
Well, and one thing on that either-or approach is it really allows the client to leverage those dollars, right, Jason?
It really does. It really does.
And that's something that, the affluent people are going to understand is the leveraging of dollars and being able to take advantage of it no matter what.
That's exactly it. And Brian, that goes right into the next point of giving them flexibility. Now, a lot of times what we mean by that is several different reasons. When we went back to that first sales idea, remember, we can do this on term. We can do this on universal life, whether it be just guaranteed level premiums, or if we want to build up some cash for tax-free retirement down the road, or we can do it on whole life. So there's a lot of different ways you can build this, but the number one thing is we can really flex it to meet those clients' goals. Now, the next point you're going to see, this is very important as well, that a lot of these products, they don't require additional licensing or CE credits. So where a lot of long-term care sales being made today, you need additional training for that. For those of you that maybe don't offer a lot of long-term care and you don't see the value of taking that training, this may be a second way to go where you don't have to do that. The no receipt or proof of care needed, this is very strong. Most of these products that you're going to be looking at when you call in are based on the loss of 2 or more of your activities of daily living. So the things like bathing, eating, toileting, transferring, walking, and dressing. Your client loses 2 or more of these, they're going to be able to take a cash benefit that they decide where that's used. And that goes right into that next last bullet point here. Does not require the insured receive care from a licensed caretaker. That's extremely powerful because it can be a family member. It can be just maybe somebody that comes in during the day, so it doesn't have to be official, which is less expensive, freeing up more of that cash.
Well, and that goes right back in that bullet point of gives clients flexibility. It allows them to control what's happening with their care.
That's exactly it.
Well, why don't we take a look at some examples here that we've kind of put together. I'll set these examples up, but we're going to be looking at a 40-year-old, a 50-year-old, and a 60-year-old, and we're going to play it out where they're paying in premium till age 83, and then at that time they're going to start receiving benefit because they went into a care situation, whether that be at home or in a facility. So I'll let you explain this, Jason.
That's great. Thanks, Brian. So when you look at this, just to set this up on this 40-year-old, this is a great snapshot to kind of show you where our thinking was behind this. The premium here, roughly $22.43 a year. So what we did before the webinar today is we did some research just to see on a fair level what would it cost for the client to put that same type of investment into a traditional long-term care plan. So with a highly reputable carrier, we were able to come up with a premium of roughly $15.66 a year. So when you sit back and you think about it, well, what is your client getting different from the life insurance plan to the long-term care? A couple main things really pop out. First off, remember, no use it or lose it. So as you can see here on age 83 when they start taking claim, you look at that, if they were to pass on before that or never use that, that full $250,000 will pass on tax-free to their loved ones. Another thing, and this will really hit home with some of you that have been in the traditional long-term care market, guaranteed locked-in level premiums as long as they pay that premium every month. We know that's not the case with traditional long-term care. In fact, I've been talking to several of you agents that have been getting some of your clients beginning letters. There's been all the way up past 60% increases on some of these long-term care policies on the books today. So very powerful message. Now, one other thing to note is that the total premium paid on this example is roughly $105,000 with $250,000 of benefit. I think the clear picture there is, Brian, there's really no way that your client's going to outlive the value of this sale.
Yeah, that's a pretty powerful story. Let's take a look at that 50-year-old now.
Well, with the 50-year-old, we're going to be real brief on this, but the same concept. The reason we want to show you this is just so you understand this opportunity is there at any age. So this sale here, you're looking at about $34.63. A high-quality long-term care plan, we did some comparison, was right around $17.50 a year. So, you know, there's an additional premium to be paid there with life, but keep in mind those benefits are still the same. Locked-in $250,000 death benefit, payable regardless if you use that funds for long-term care or nursing home care stay or not.
Well, and it still answers that or handles that objection of what if I never need to use it?
That's exactly it. Your affluent clients will appreciate that. I mean, they want to keep every dime they can in the family.
And then we'll look at that 60-year-old.
Now, with the 60-year-old, it's the same thing. So now, as you see, the premiums have started to increase. Now we're up to about 58. We're up to 58.74 a year. So the expense you coming in, but still, when you total up these premiums, the total of this is still only $130,000 that they're going to pay before they start claiming. You compare to that to the benefits that's going to be received, no matter what, of $250,000. There's still a lot of value.
Yeah, and you know, once again, I'm going to harp on this, but it still gives them benefit either or, whereas in a traditional approach, they're going to get benefit, but they're really not going to want to receive that benefit because they're going to be in a situation of confinement or care.
That's exactly it. No matter what, we're never going to want to receive the benefit, but you can see that value for the family is really strong. By the way, just so those of you know, we did the research here too. Comparing this to a traditional long-term care plan was right around $28.36 a year. So, you know, there's still a little bit of a gap there. You'll need to sell that, but I think a lot of you that understand what we're talking about will see there's a lot of value using life versus traditional long-term care in a lot of situations.
And if you have any additional questions, give a life marketer a call after the webinar. But let's move on to the next sales idea, and that is called Breathe Life Back into Your Annuity. And, you know, this is built around annuity clients. If you've got annuity clients, you know, we all know where the interest rate is right now. We're in a low-rate environment. We see tons of underperforming annuities, and a lot of times out there, the agent that sold them that underperforming annuity or another agent is trying to come in there and replace it with another annuity. And, you know, that's basically just repackaging the same annuity they currently had and trying to sell them on a better potential rate of return. So we're going to bring it out a different approach and actually ask the client some questions, find out about their goals, and if their goals have changed, then we can talk about an option for life insurance and breathing life back into that annuity. So let's take a look at an example of how we can do that. Example one, we're looking at clients 59 and a half or older, and we've got an annuity that has $100,000 with a 6% surrender charge. So we're gonna have $6,000 in surrender charges. But you know, I'm presenting this idea. You need to talk with the client. You guys need to get together and find out if this is going to be suitable. Remember, these aren't going to be funds that you're going to have much access to as far as cash value, depending on the product that you move it to. But it's going to be more designed for leave-on money. But if you look at that, $94,000 creates a $250,000 benefit in this example. So let's break that down a little bit more. So the $6,000 surrender charge creates a $250,000 future value. Let's look at that from a 5-year rate of return perspective, over 21%. And on a 10-year rate of return, we're talking over 10% rate of return, and that's a tax-free death benefit. You got to think about those rates of return are after-tax earnings. You look at any other product out there, you got to worry about what type of rate of return you're going to need on a pre-tax basis to get the after-tax equivalent.
That's exactly it. When you think about this, too, a lot of you may have even been connecting the dots, but another thing to mention is that a lot of these stories tie in together. So if you're looking for ways to find some funds for a non-traditional long-term care sale, or we're talking about investing back into the family, this is one of those ideas that may come up that can show your clients that there's a lot of different ways we can be creative and find that premium for them.
Okay, well, let's take a look at one more example, Jason, and I'll let you set this up.
Perfect, perfect. So now what you're looking at here on the screen is that same situation as example 1, but now what if the client's under 59 and a half? Does that completely shoot this down? Well, no, it doesn't, because every client has a different set of goals, and the things that they need will definitely differ. So this situation, we have that same $100,000 annuity with that 6% surrender charge. However, one thing that's changed here is now we have a 10% excise penalty, that government penalty. So our total funds that we'll be able to use for this idea is $84,600, bringing that same $250,000 death benefit. So what does that translate to your client? Well, that $15,400 worth of charges creates a $250,000 future value. So when you look at it this way, that $84,600 creates a $250,000 future value with a 5-year rate of return of 24.2%, a 10-year rate of return of 11.44%, and all of this is tax-free, and a lot of times will also be able to be used for an acceleration of benefits for that long-term care that you need as well.
Well, that's excellent, Jason. Those are our top 5 sales ideas. What we want to just touch on before we end the webinar is just some of the things happening at Premier that we're offering to agents that you can take advantage of for free. We've got a rewards program. It's called our Loyalty Rewards Program. In my opinion, it's the most competitive, aggressive program on the market. It's uncapped. I don't know of any other rewards program out there that gives you an uncapped, unlimited earnings potential. We also have a 5-day, 4-night trip for a very little premium. Call a life market to find out, but it's very little premium compared to a lot of the other FMOs out there. We've got a software program called X-Ray. It's an underwriting software where it really puts you right in line with what the underwriters at the carriers are thinking, the questions that they're going to need to know to be able to accurately underwrite these questions, which in turn is going to allow you to accurately quote a client's health assessment, before you write that case. We've seen our placement ratio go up here at Premier since we've started using it. I can only say that that would probably help you as well. We've got a term quote engine on our new web page underneath our Life Tools tab. We've got an underwriter on staff. He was the head underwriter at Indianapolis Life for over 17 years. Wealth of knowledge, wealth of information, helping us on those more little tricky cases as far as health nicks and hiccups and things like that. So we always have access to him if you need additional support. We also have an illustration support. We've got a full-time person on staff that all that person does is illustrations. You look at a lot of other FMOs, you're waiting 2, 3, 4 days, 5 days to get an illustration back. Less than 24 hours, you're going to have an illustration in hand. So that's, in my opinion, real important. You got anything else to add, Jason?
Yeah, just a couple things, and I think you're going to see the overall theme is Premier has invested a lot of money to make the producer's life easier and make sure you're being a lot more successful, including one thing to note is our contracting. A bulk of that is online, so it will prevent you from needing to fill out hundreds of pages of forms to get appointed with our carriers. Another thing, we spend a lot of time asking our top producers, those guys that are earning a lot higher earnings than the average guy, what's he doing that's making him so successful? Most of the time it comes down to 3 key areas. First one, of course, is always going to be activity. They're doing more of it than anybody else. The second one is they understand what we just talked about here today, where those sales opportunities are. They're not waiting for their client to come to them thinking that they're going to say, well, I don't want term, I just want a permanent plan. Because as we know, That's not usually going to happen. And then that third area, and this has really been big, something we focus in on, and that's niche marketing. That's understanding that getting in front of people on different concepts is really what's going to turn you into their advisor. So for that, give us a call. We've really taken in Social Security planning. We got a kit that works well for that. We also work with a group called Wealth and Wisdom. Definitely call us on the details for that. That's a real great way to sharpen your axe with communication and marketing your business. Also for business owners, if you're wanting to work in that marketplace, we have some exciting things to talk about in that industry as well. The last thing I want to mention, Brian, is we did get some questions here during the webinar today. So instead of answering those, we're going to go ahead and have a marketer call you back to answer those. But we definitely look forward to hearing from you.
Well, yeah, I want to first and foremost thank everybody. If you do need additional assistance or something came up as far as some questions or clients that you want to look at, our number's on the screen. It's 800-365-8208. Just ask for a life marketer, and we want to thank you for your time.
Thank you, everyone, and thanks for taking a little time to sharpen the axe today.
Have a great day.